Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's June 1st. The summer is finally here. The market's going to open up in a little less than 2 hours, in about an hour and 50 minutes or so. I'm getting a nice early start this morning. I guess when it's too hot, it gets a little warm. It's hard to sleep. Plus, I'm a little excited. I'm taking the family to Orlando to Universal Studios. So I will be around the next couple of days, but I will be available a little bit less. I got to spend a little time with the family. I'm sure everybody understands. Now, if you have any questions, you can always email me at support@marketgeeks.com. I will always answer your question, even if I'm standing in line at one of those crazy rides with my daughter. Anyhow, let's talk about the markets. The Dow's opening up pretty good, or at least it looks like it's going to open up pretty good. God only knows what's going to happen up in the next hour and 15 minutes or 50 minutes. The Nasdaq looks like it's firming up, but it's been a wild ride. I mean, look at this. Overnight, this thing fluctuates 100 and let's see here, 50 points. The Dow fluctuates over 130 points. Actually, it hasn't been all that volatile. It's actually been it's only been 175 points. Not a volatile day compared to the last couple of days where the Dow's been moving 500-600 points a day. Interestingly enough, and I wanted to show you this, if you look at volatility right now, and again, there's no guarantees out there, but if you look at volatility, I want to show you this. This is the 10-day volatility, and I'll just go ahead and make the chart smaller. There you go. Let's delete this here. So as you can see here, volatility is starting to turn lower. When volatility turns lower, it usually means markets rally. What I'm hoping for is there's a little more upside in here and the Dow can reach the 34,000 level. If we can reach the 34,000 level, there's a really good chance we can bypass the 200-day moving average, which would pull us back into bullish category, or at least bulls would be controlling the market. I'm hoping that's going to happen before we sell off once again. That'll be very, 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 very important. On the other note, we have the ISM Manufacturing Index report coming out at 10 a.m. today. This is important. Why? Well, this report tracks, surveys purchase managers about general conditions of products, new orders, order backlogs, supply chain. This will let us know how the supply chain, exports, imports, prices, our deliveries are impacting our managers, 300 manufacturing firms worldwide. I'm hoping that the number is better than 54.05. I'm hoping the number is in the 56, 55 area, or at least meets the consensus and doesn't slow down. Then it would show us that we're not slowing down and that the bottleneck and the inflationary pressure is not impacting and China's slowdown is not impacting the world as much. Hoping the number is not too low. I'm hoping it could shrug off. Bond market, again, we're still in the range. I mean, we're kind of breaking a little lower, which is not unexpected, but we're moving sideways. Now, this moving sideways business is really, really important, and let me show you why. I showed this to my group yesterday, but one of the first sectors and one of the most leading sectors that is starting to turn is the semiconductor index. Now, the semiconductor index started selling off a month after the bond market started selling off. Remember, interest rates are most sensitive to what? Tech stocks. And we know the chips are used in everything tech, right? I mean, you don't have to be a tech wizard to figure that out. So the fact is, bond markets are not going down anymore. They're moving sideways. And I told you this was a positive sign because look at the semiconductors. This is the index. This is the ETF. It tracks several. Let me show you all the constituents here. You got all the big boys. Taiwan, NVIDIA, Texas, Analog, Intel, Lam, Qualcomm, you name it, it's in here. And if you look at individual stocks, take a look at ADI, one of the top ones. It's right now near the highest point since January, since when we started selling off. This is the sell-off trigger right here. Let me just go a little further right here. But look at where we're at right now. This is really, really positive. And if chips can rally right now, this would be very instrumental. Another major factor that I've been pointing out to you guys is on a cumulative basis, you still have communication services down here, right? But watch this. It's now the second spot. Remember I told you it was starting to shift? Well, that's the sector. Look at this. Let me go back to 90 days. That's the sector that was lagging behind the most. Communication services. Look, January 20th. Let's go back 70 days. Communication services. Let's go back 50 days. Communication services. That's already March. Let's go back 30 days. Excuse me. Communication services, right? But look at it now. Look at it now. Look at where it is. So small caps are starting to move. Chip stocks are starting to move. Volatility, if we can break this level right here, if we can break the 25 level, we're back in safety zone. That's why I'm still short volatility. And what's really great, look at the stocks that have been leading for the last 5 days. Information technology and consumer discretionary. Energy's in between. Now, communication services is down here, but look at this is the most speculative stocks. Look at it yesterday. This is yesterday. Information technologies up here. Communication services, consumer discretionary. Energy's all the way in the last spot. That's yesterday. And we had some really bullish news on energy. So things are starting to turn around a little bit. Let's talk a little bit about global economy. And I'll get into some nitty gritty. Traders are keeping a close eye on manufacturing data. That's the report that I talked about right here, ISM manufacturing data. We're keeping a close eye on it. That's coming later today. Oil resumed their upward advance, falling back from nearly $120 a barrel on Tuesday when prices surged after the European Union agreed to block the majority of oil imports from Russia. Putin, watch out, they're choking you out. Prices ultimately fell Tuesday on speculation that OPEC cartel is going to limit and offset lost oil output from Russia. We'll see if that's going to happen or not. The jump of more than 50% of oil prices so far this year is a big part of the inflation sweeping the world. A report Tuesday showed that inflation in the 19 countries that use the euro hit 8.1% in May, the highest level since 1997. Let's see, 2007. No, it's not 40 years. Through mid-May, the S&P tumbled 7 straight losing weeks, longest streak since the dot-com bubble. Slowing data in the U.S. economy has accentuated the worries that high inflation will force the Fed to raise rates, which is why the market's been moving this way. Stocks have managed to avoid a full-blown bear market, but they went down to almost 20% below their record high. Speculation has grown that the Fed may consider a pause in rate hikes, which that would be a real bullish treat for us. Beginning Wednesday, the Fed will begin allowing some of the $1 trillion worth of treasuries and other bonds that it amassed through the pandemic to roll off its balance sheet. Ouch. So we got to keep a real close eye on the bond market, because if the bond market starts going down again, that's going to put more weight on the stock market. But if the Fed makes an announcement that they're not going to take action in September, which I've heard rumors about, that's going to give us a nice rally. That would be a major catalyst. China getting better would be a major catalyst. The war ending would be a major catalyst. 3 things on the horizon. But the fact that the bond market's moving sideways, the fact that the weakest sectors are coming up, communication services is no longer lagging behind, not even close. Soon, on a cumulative basis, it's going to go beyond the second spot. Right? Look at this. Only 11, just a few more percent to go. Now, today's Wednesday. I'm going to give you my hottest bullish stock and my hottest bearish stock. My hottest bearish stock, I'll start with the bearish play, is Beidou. I think China is not going to get anywhere with the U.S. right now, and I'm seeing tech cool off just a little bit next few days. This stock is really overbought. I think Chinese stocks got a little overjoyed because there was some talk between Biden and China that the sanctions may be loosened up, but I'm not seeing it yet. We're right at the 200-day moving average, and RSI is at 80. It's probably a good time to sell Beidou, something I may be taking advantage of today. To the upside, we're still got to be defensive till we have proof the market's bullish. This craft and a lot of the basic materials and consumer staples got really sold off. It went from 44 to 35. It bounced back off the 35. It's right at the 200-day moving average. RSI is still oversold, and I think Heinz is going to go up over the next few days. Expect it to go to 40, 42. So I'm still bullish Heinz, and I'm bearish Beidou. Now, before I let you go, keep your eye on chip stocks. If we break on ADI the 171 level, if the Dow Jones can break the 200-day moving average, we're in play again. Keep your eye on the ISM Manufacturing Index. And again, there's been talk that the Fed may pause raising rates in September. That's been way, way priced into the market. So if that happens, we're going to see a nice little bump up in the bond market and a nice relief rally from tech stocks. That is almost a certainty. If the Fed, if the rumor is true and the Fed slows down in September. Now, before I let you go, I've got something important for you. In case you missed the memo, 22% of stocks in the market are still bullish. They aren't the well-known names that people were trading during the post-COVID bull market. I'm talking about value plays that have dirt cheap call options right now, like Heinz, or defensive names that thrive during bear markets, like energy stocks. I'm talking about value plays that are really, really cheap right now. You can get in a bargain, but it means we almost have a quarter of stocks in the market to play with right now. Not bad. Stock that have previously led to some big wins and hardly anyone knows or cares about anymore. People care about Nvidia. They don't care about Heinz. You know what I'm saying? Click on the link below and learn which stock traders should take advantage of right now. Folks, do this right now. You're going to love this. And follow the link. Check out my class. It'll show you the 4 telltale signs that make stocks really, really move. And check out tomorrow, top ETF and option pick. I'll see you then. Follow the link below. If you can't find the link, check out the descriptor in the Wealth Press YouTube channel. Send me love letters, comments, post comments below. I want to hear from you guys. Bye. Have a great, great day.